Hello, welcome to my channel. Before proceeding to study, please subscribe to my channel. Good day, everyone. Today, we will explore the fascinating world of blockchain technologies. We'll dive into key concepts: digital signature, public key cryptography. Let's get started. Slide 1. Digital signature. Start with digital signatures, a fundamental concept in cryptography and blockchain. These signatures are crucial for ensuring secure, authentic, and tamper-proof communication in decentralized systems. Explanation of definition. A digital signature is a way to prove that a message, document, or transaction comes from a specific sender and hasn't been altered during transmission. It's like a handwritten signature but much more secure and impossible to forge due to the cryptographic techniques involved. How it works. 1. Key pair. The process starts with the generation of a key pair, a private key and a public key. The private key, kept secret by the user, is used to create the signature, while the public key, shared openly, is used to verify it. 2. Signing and verification. To sign a message, the sender computes its hash and encrypts it with their private key. This encrypted hash is the digital signature. The recipient decrypts the signature using the sender's public key and compares the resulting hash to the original message's hash. If they match, the signature is valid. Example: think of a cryptocurrency transaction. The sender digitally signs the transaction data, proving ownership of the funds and their intention to transfer them. Why it matters. Digital signatures ensure that no one can alter a transaction or deny their involvement. This is critical in blockchain, where trust is established without intermediaries. Slide 2. Public key cryptography. Now, let's move to public key cryptography, which is the foundation of digital signatures and many blockchain features. It's also called asymmetric cryptography because it uses two separate keys. Public key cryptography enables secure communication between two parties who don't need to share a secret key in advance. Instead, they use a public key for encryption and a private key for decryption. How it works. 1. Key pair generation. Each user generates a unique key pair. The private key is kept secret, and the public key is shared with everyone. 2. Encryption and decryption. If someone wants to send a secure message, they encrypt it using the recipient's public key. Only the recipient can decrypt it using their private key. Features. Some key characteristics of public key cryptography include: 1. Asymmetry. Different keys are used for encryption and decryption, making it secure even if the public key is known. 2. Confidentiality. Only the intended recipient can access the data. 3. Scalability. It works efficiently in large networks, where everyone can use publicly shared keys. Examples. RSA and ACE are popular algorithms used for public key cryptography. For instance, RSA secures online communications like HTTPS, and ACE is widely used in blockchain systems. Significance. This technique makes secure communication in a decentralized environment possible, ensuring data confidentiality and integrity. Slide 3. Digital signatures in blockchain. Introduction. Let's now discuss how digital signatures specifically work within blockchain technology. Role of digital signatures. 1. Transaction validation. Every blockchain transaction must be digitally signed by the sender. This proves they own the funds they're transferring and are authorizing the transaction. For instance, in Bitcoin, the sender's private key signs the transaction, while nodes use the public key to verify it. 2. Immutability. Once a transaction is validated and added to the blockchain, it becomes immutable. If someone tries to alter it, the digital signature becomes invalid, breaking the chain. 3. Decentralized trust. Digital signatures eliminate the need for intermediaries. In traditional banking, banks act as intermediaries to verify transactions. In blockchain, signatures handle this verification. Example. In Bitcoin, Alice signs a transaction to transfer 1 BTC to Bob. Miners verify the signature using Alice's public key before adding it to the blockchain. Why it's important. Without digital signatures, blockchain systems couldn't function securely, as there'd be no way to verify the authenticity and integrity of transactions. Slide 4: Public Key Cryptography in Blockchain. Introduction. Finally, let's explore the essential role of public key cryptography in blockchain systems. How it's used in blockchain. 1. Address generation. Public keys are hashed to create wallet addresses. These addresses are used to send and receive cryptocurrencies or interact with smart contracts. This ensures user anonymity while maintaining transparency. For example, Bitcoin addresses are derived from public keys using hashing algorithms like SHA-256 and RIPEMD-160. 2. Transaction security. When a user initiates a transaction, it's encrypted using their private key and verified with their public key. This process secures the transaction and confirms its authenticity. 3. Enabling digital signatures. Public key cryptography makes digital signatures possible, providing non-repudiation and ensuring that transactions are legitimate and cannot be altered once signed. Examples of use cases. Bitcoin uses ECDSA, elliptic curve digital signature algorithm, for transaction validation. Ethereum employs cryptographic techniques to secure its smart contract operations. Why it's crucial? This technology is the backbone of blockchain's trustless architecture. Without it, there would be no way to ensure the security, privacy, or integrity of blockchain transactions.